Good evening. That's a Josh. Thank you. Sir, all are fully charged. They have heard the session the entire day today, enjoyed. And Kerala is always a lovely place to come. And I think George sir has a good charge after coming to Kerala, right? Agreed? Kerala is always a place like that, God's own country. Beautiful place. And now we are going to discuss on the matter which is upskilling ourselves. Many IFAs want to do that. Sir, Ananya sir, I'll ask you the first question. What is your AMC's action plan on especially AI? You spoke a lot about AI in your presentation. And what is the plan which you have on artificial intelligence part for MFDs, and what is the thing which you follow in your asset management company when you select a fund, whether you use this AI part in that or anything like that? How I would like to have more from your end, so that we need to upskill ourselves, because see, 99.99% in this hall know about AI, but 0.01% only know how to use AI. Yes or no? We would like to hear from you, sir.
Yep, thank you, and once again, a very good evening to everyone. Before I get into AI, let me talk about GI, which is like a general intelligence. And what do I mean by that? When I landed yesterday and today morning, I was thinking through, if you are in a Kerala and you aren't doing a massage, then you are missing on something. And then I heard Sandeep talking about that before entering into the room, he had a morning thing, that. So I said, that's a general intelligence, so after the lunch, I quickly did that. So that's a learning from the peers that you should be doing it. But more importantly, let's talk about AI. AI, machine learning, I think this is a very hot topic. A lot of people have been I was delivering into it, trying to get a sense how should we be using it as a tool in terms of ensuring that we are able to maximize or make the businesses more efficient. So in our asset management, if I have to look at it, I can think of three aspects of the businesses. One is that when we are working as an investment manager, managing the fund, which is creating the funds and all for you all. Second one is, I personally believe in out of the 5 Ps that pretty much defines the business, which is product, pricing, people, process, and performance. On 3 Ps, practically you have no idea, no control. Product, pricing, and performance, you have no control. The only 2 Ps where you have a control are processes and people. And the process is where the AI has a very, very strong role to play. So getting back to what I was started off saying, that your investment team is the one bucket to look at. The second bucket is my own team, wherein we are building the engagement, whether it's through a client experience or a sales. And the third segment is the audience sitting in the room, who are the set of MFDs that we deal with. I did allude on to a little bit first part of it in the morning session, wherein, I think we have got so much of data available with us. The real question to us is, how can we make those structured, unstructured, internal, external sources of data into a much more informed funnel, take a funnel approach, and then you make those statements far more qualified in terms of taking a decision, which is where we have got a wiki, which we have created. We have gone and extended further to say Ask Wiki, where we can actually question and get the answers from it. So that's the system that we have built in, and believe you me, it's all about getting the data in a structured format and using those machine learning tools and all to ensure that the information comes out in the right way. But the second part, which is more important part, is the process on the engagement. That's the beauty is informations are available right with us. For example, a mail coming from you, an email from you all to my team is a strong source of information for me to look at what are the sentiments, what we call a natural learning process. There's NLP as a process. We can actually go and see what kind of questions are coming into us time and again. Am I missing on something? Now, it could be as much as, different behaviors has been demonstrated by both our partners who are sitting in the room and the end users, the clients, at different points of time. Now we can collect those data and create various scenarios wherein we can have a far more informed way of engaging with intermediaries and through intermediaries with our clients, and go and tell them, look, there are enough evidences in the past when similar situations, people have behaved in a certain way, but there is a better way of engaging with you all. It could be also ensuring that the entire CRM tool, that the tool which is nothing but ensuring if my teams are meeting right set of people, carrying the right set of information at a right set of frequencies. These are another aspect that you can build through AI. So this is second part of it. The most important part, the third part, which is the world of yours. I would say AI has a very significant role in segmenting. If you carry an information which is not correctly suited to the guy who's a recipient, then actually that information is void ab initio. It doesn't carry a meaning for him. Once in a quarter, the judges sit, they evaluate everybody. First, the self-assessment are done by the individual themselves. Then the second level of assessment gets done by the judges. And then we pick top 3 service people across the country. And then once in a quarter, we reward them. It's going to completing 1 year, and then we will have a 1 year of service excellence program that we have done. So these are the smaller things that we do, be it on the knowledge part for the sales team, be it on the objection handling part for the guys, either sales or a client experience, and more importantly, trying to bring in objectivity to a subject which is largely, thankless, which is client handling and all of that. If you do a job good, it's expected out of you. If you do a mistake, why are you doing it? And very difficult to judge if you're doing a good job or not. So we have tried and built some kind of objectivity to that aspect as well.
George sir, how can we benefit from easy availability of data right now?
Yeah, so with all these softwares and systems which has come up, we can easily, in terms of processing the number of stocks, or if we were to screen from 1,000 stocks which are available, that is very easily available at this point in time. So if something would have taken us 2 days in the past, it can be done in half a day. But our sense is, the key differentiator would be your ability to think long term and identify how things would pan out over the next few years, and that could be probably the edge from an investment point of view. So if we look at one of our real case in 2016-17, when all these digital systems were coming up in the IT system, the popular rhetoric at that point in time was in Indian IT services, having the baggage of many decades in the past, they will not be able to reskill their employees, and that was proven wrong around COVID time, and the growth rates kind of revived. So that kind of capability to think long term and identify trends, that would still require that the logical intervention. So that data processing and collection part can be minimized now, and you have more time to think and visualize how things would pan out over the long term.
Thank you, sir. Sandeep sir, can you throw more light on your momentum stock picking and the benefits because of that for the investors and the MFDs?
So actually we don't do any momentum style of investment. Okay, so just me give you perspective. We do other way. We specialize in inflection point as an inflection point strategist. Extreme odd situation. Okay, when we talk about from a behavior perspective, and either stocks are trading in the most admired territory or trading in the most hated zone. Those are two extreme which we like to optimize in our framework, and that makes a lot of sense because if you're buying something on the extreme level in the market, your downside is protected. Okay, even let's say stock doesn't perform for a while, at least your downside is protected. And this is the strength which we combine when we combine qualitative, quantitative, and behavior also in our VLRT framework. We are able to identify these inflection points in a unique manner. So we don't do actually momentum trading. Rather, we have just launched a fund which will be only looking after the momentum as a thesis, which is more from a short-term duration perspective. So all other funds are more from a inflection points of thesis which we follow. This fund which just launched, okay, on 30th, will be only looking after the momentum aspect.
So in the momentum fund, we can expect people who want to make a quick money, short-term money, or anything like that, because people need the clarity on that. They should not get confused.
Okay. So I tell you, everybody has an urge for trading in the market. Okay. We are not trying to position this as a trading portfolio. The way the mutual funds are always sold as a long-term product. Okay. And I always talked about there's a need for long-term, there's a need for medium-term, there's a need for short-term. Okay. So we manage money as a treasury style where we can have a decade view also, we can have a long-term view, medium-term, short-term, near-term, even cash call, a hedge call we take. Okay, so we launched one fund called Quantamental some time back, 2 years back, and it did very well. That is the area which we focus purely on the medium-term duration. So every product has broken into a duration perspective. So all small cap, mid cap, techs, they are long duration product. Quantamental we launched from a medium duration perspective, and this momentum fund we have launched more from a shorter duration perspective. So it gives you a better diversification within quant as a portfolio. Don't look at purely from a trading perspective, but the whole thesis is that this product will be, and we have defined momentum mathematically very different. A lot of people believe it's a breakout or breakdown or technical levels of price or volume, which is the general perception about this. That's not the way this fund will operate, but purely from a duration perspective, the focus of this product, when I say focus, so maybe 60% of our investment will be on the shorter duration. Okay, in Quantamental, 60% of the focus is on the longer duration, and similarly when we take our mid and small or any other funds, 60-70% weightage is on the long-term duration. That's the way it will going to be different from other funds.
Thank you, sir. Ritesh ji, and see, we, the MFDs, need to get ourselves upgraded, updated, upskill ourselves and also we do lot of attend sessions like this and many more. How do you do for your sales team? Whether you do any training for your sales team to guide the MFDs in the days to come, because a lot of things, new things are coming. The old is not continuing, but new is coming and coming, going on. So how equipped is your sales team?
Yeah, very apt question, Amejji. So if you read the tagline of our group, Motilal Oswal, it says knowledge first, right? So the name itself talks about knowledge, and we take a lot of pride in that. So just as an employee joins the organization, he's handed over a book. Okay, so when I joined the company, I was handed over a book, and I was told, read it. In next 30 days, you will exam on the book. Okay, the name of the book is Ultimate Sales Machine, which each and every employee of the organization need to read and have an exam on that. Book is quite an interesting book. Everybody can read that book. It's for anybody who is in sales should read that book. Okay, Ultimate Sales Machine by Shet Holmes. So that's the start in terms. So like Anunya mentioned that we are an AMC where we cater to both the clients. We are a focus on mutual funds as well as the alternate product, which is PMS and AIFs. Now, all of you are aware about performance. So there's nothing we can impart anything new to you there, right? But what we can do as an AMC is to do value add. And for doing that value add, we need to ensure that our employees have enough knowledge, in their handy. There is a system to track it. So what we do 2-3 things. First thing, we have, we have our internal fund manager session on the products, etc., where we talk about the stock, portfolio, themes, and everything. And every employee has to get 80% in the exam, which happens within a week after the those session happens. Also, each and every employee is enrolled for a education program. Could be a Udemy, could be a Coursera, could be anything. They are, and against every course completed, they are given a point. And every employee has to achieve certain point end of the year. And if they don't achieve, it impacts our KRA, and we all are employees, so we know KRAs are very important end of the year for appraisals, right? So it's a mandate in terms of each and every employee to complete that point system so that they are beneficiary of the better appraisals. Also, we are very, very conscious in terms of the we are very conscious on the knowledge part. So what we also do is that beside that, each and every employee, similar to what Ananya said, but what we do, each and every region, we have a product champion. And that product champion has to ensure that each and every employee is an expert on the one, on each and every products, right? So they have to present to the regional head every month. Each and every employee, keeps everybody has a turn, and they have to actually present on a product or a theme in those meetings. So idea is to have 3 levels. First of all, through education, through books. On our birthdays, what we get from Mr. Motilal Oswal, we get a book. So it's a culture in the organization to have knowledge, and that's what is getting imparted to each and every employee, and that's you can say kind of culture we have built in.
Very nice to hear, because that's what needed. When we need guidance directly, because tier 2 and tier 3 cities, when your RM is equipped, they'll be more beneficial, which is very important. Thank you, sir. And George, sir, we know what is Quant is following, what is the strategy, because you are new to many here.
Yeah.
What Quant is following, and many know also what is Motilal Oswal following. Today we heard from sir how 361, Ananya ji, how 361 is following. We would like to hear from you. How do you cherry pick the stocks? What is the process?
Yeah.
Any particular methodology you use to pick the stock?
So we are a bottom-up stock pickers. So we have a fairly large research team than one would imagine for a fund house of our size. So we have an analyst team of about 13 analysts, and over and above that we have about 4 analysts who looks exclusively at those ESG parameters. So all those analysts are bifurcated. They are given 1 or 2 sectors to study and come out with ideas, and therefore by ensuring that the analyst does not have many sectors, we ensure that they are able to study those stocks in a deep way. And we have a database of about 250 stocks. The 2 primary criteria where we place importance, one is the stock has to be liquid. So in quantum long-term value, equity value fund, we have a liquidity criteria of at least about $1 million, which is about average trading volume of 8 crore. So that's primarily to reduce the risk in the portfolio. And the second thing which we don't compromise is the governance standards. The company should have excellent governance standards. If they have a history of short charging investors, we avoid those names. So these are the 2 core things, and then of course every fund has its tail. For instance, quantum long-term equity value fund, we tried to buy stocks at a discount to its intrinsic value. So with our valuation and the research reports, the team debates every Wednesday on the stocks which we research on a continuous basis, and that's presented to the team, and that thesis is tested. And finally, we come to a buy and sell price for every stock based on the historic trading ranges and valuation methodologies and all of that. And whenever the stock hits our buy limit, we initiate a position, and when it gets out of the sell limit, we sell out of the stock. But of course, if it's an ESG fund, the investment is based on a different framework, which is followed by based on those ESG parameters. And the recent small cap fund, it's growth at reasonable price. But whatever be the methodology, it's pure bottom up, and it comes from the analyst.
Thank you. Friends, did you see the matching? See, what all 3 people have said is their team, they were given an opportunity to present on a stock every week. Agreed? Like what we are doing, we are discussing among ourselves which is the best fund, why should we select. I've seen Mr. Padmanabhan's a lot of tweet and other things on which fund, why, many things I see. So exactly same, the way what we follow, we are on the right path, right? I think so. Thank you, sir. Sandeep ji, I'll come to you. Everyone in this hall know you very well, but not your team. how strong is your team? Apart from Mr. Sandeep Tandon, how many analysts you have and how many other members who take care of the fund?
So it's a good question. Okay. I always believe that I said in the presentation, we don't believe that one money manager is equipped with every capability. I always say that I have 20,000 efficiency. Okay. And somehow this industry has evolved as a money manager sort of thing that they know everything. So we don't believe in that thesis. Globally it is not. Okay. Here you have a concept of research and fund manager, but predominantly driven by the money manager, or industry called the fund manager. We believe in specialization. Okay. Two reasons. So when you talk about our tagline called multi-asset, multi-asset, multi-manager. So we are obviously, we look at multi-asset and we are trying to understand interlinkages between that, and we look at multi-managers also. Okay. So when we talk about our entire thesis, one slide I explained you, we were to talk about that we work on predictive analytics. Who built this predictive analytics? Is our own team which builds it. It's not something that it's our proprietary knowledge, so it's not something we have taken from the standard software which is available in the market. We build that. Over and above, we have a large analytic and research team, and which is accompanied by the money management team. All put together, we have 21-member team, okay, which includes scientists, mathematician, geologist, apart from chartered accountant and management graduate, okay. But apart from me, everybody is relatively very young, okay. So that's the way we defined us, okay. So analytics are also part of that team, okay. They may or may not take the decisions. Decisions are taken by all human beings, not by algorithms in any manner. So our money manager take the call, but the team is supported by analytical mindset people also, okay. It's also a task to maintain these data. When we say we spend $1 million on data analytics every year, then you can understanding our process is relatively, we are not in the thought process of this sort of approach, combining, looking at, we live in dynamic world, everything is very dynamic. We track data on consistent basis. Intraday data also we track. Some data are quarterly disclosed because we track 2/3 data is macro. Some data is monthly. So depending on the frequency of which comes. So it's a very dynamically we manage, and it's a large team. So we believer of creating specialists rather than saying one money manager takes that call. So that's the way your team is structured.
Thank you, sir. Sir, Ananya ji, I am coming to you. See, despite of such a consistent performance in many of your funds, and this is completely gone unnoticed, how you will respond to this?
You know what? I should really be feeling very sad about it, that having a 9.5 years of a consistent track record, beating the benchmark by 250 to 300 bips across the time frame, and we are just, surpassing 5,000 crores with a mark to market. So if I look at an effort money, probably what, 2,500, that's about it. So I would rather respond to it in a way that when any company goes through a cycle of growth, the leaders obviously have their own ways of defining it, and every leader have their own priorities, how he or she wants to build a business, which is where 361 were getting built in a certain way. 2 years back when I joined in, I was pretty clear that one of the segments which has to be part of our bouquet, and we just can't afford to miss anymore, is an MFD, which is the closest to my heart. And that's the way we started getting more, making more ourselves visible, whether through a fintech or through our own partners, and started making, started voicing ourselves and started making us getting noticed. Now, what has come up? And many of these sessions, people have said, why were you till now? Where were you? Why we didn't hear from you? We missed an opportunity to be a part of a great journey till now. Yep, I think it is. You are right. So we certainly did a mistake of not getting noticed, but I don't want to call it a mistake simply because the leaders who build businesses have their own ways of doing it. But to me, I think what you would now see is 361 being far and more visible, more eyeballs to this brand, and more importantly, we seek the support of you all. But adding to that, Ramesh, I would want to say, you did ask one question to pretty much everyone, and in a way you have put it on to me as well, which is, why are you focusing on MFD? So maybe it was a little indirectly to me, but directly to others. Well, I don't think, let me admit it, honest, with a lot of honesty. Do we have a choice? Take pride. You guys should take a pride. That the team sitting in the room should take a pride that you have done such a fantastic job. You people have done such a fantastic job in last maybe 5, 10, 15, 20 years in the evolution of this entire industry, that today you have become a force to reckon. And with this Ignite kind of association, getting like-minded people together, you are doing just the right job, which is to build the platforms in a smaller groups, getting the people together and playing the most critical part of the growth of this business, which is imparting skills and knowledge. So believe you me, how can one ignore 40-45% of the market anymore? Last point, I don't know how many of you noticed when I was getting introduced, when I walked in the morning, I have been a banker. I started my career as a banker with Citibank, ABN and RBS. I'm talking about 1998, 95, 98, 19, 2000 year. We used to have the assets of everyone who has money. I have seen through my own eyes the transition of assets from the banking system to individuals, mutual fund distributors. And you know why? Only one reason. You talk for them, not for self.
That's very nice. So kind of you for the kind words on Emma, please. Ritesh ji, I'll come to you. In the recent past, Motilal Oswal has bounced back very well. What is the reason? Whether any change in methodology you are following? Like to hear.
Yeah, Rameshji. So Motilal Oswal as an AMC, we have been there in the mutual fund industry for last 10 years, and we are a AMC who follows quality and growth as a style. Okay, and our philosophy is well known to all of you. I'm sure QGLP, coined by Mr. Ramdev Agarwalji himself. So every style has its own challenges. Last 2-3 years, the value as a style did very, very well. So we also, we introspected, we understood, what we could have done differently. And I will not say we'll change any strategy, but we added more risk measures. Our framework got slightly changed. And what we did is basically we ensured that earlier we had a ring around our fence around ourselves. We said no more fences. Earlier we were like, we not invest in certain sectors or spheres. We said no, we'll be open to everything. If you look at it as an AMC, we at times, we are pure bottom-up stock picking AMC. What we have done now, we have also merged a little bit of top-down. So now as an AMC, all the portfolios will have a X percentage of portfolio to certain themes will be chosen on the AMC level with the IC committee, analysts and the managers together. And we also have added, a lot of people come to us and said, you guys only say buy, rise, sit tight. So we said buy, rise, sit tight is good. Ramdev Agarwalji himself is somebody who has followed it since, and he has made multi returns in that. However, when you're managing public money, we need to be slightly more active, and we put a framework to ensure that we are able to get all certain stocks on the valuation basis, both up and down, laggards, we can cut fast. We have also been very conscious of making sure our portfolios now remain, our best endeavor is to remain first and second quartile. So if you open now any performance of our fund house, so right from let's say mid cap fund, 3, 4, 5, 7, 9, everything first quartile, larger mid cap since inception first quartile, ELSS now all first quartile. So we were always wanted to be the best performing AMC because we migrated from a PMS to mutual fund. I think the biggest change which happened in the KRA for the managers is that we don't want to be the highest performing AMC honestly, because when you take task of being a highest performer, you will also will have some few bad years. So idea now every manager has a task or the KRA of being more consistent and be in the top and second quartile, and that is what is working wonderful for us as an AMC. And if you look at today, either on PMS or the alternate funds, you will find Motilal more or less on the first quartile. And I think I would appreciate and I would thank the community, MFD community, those who have supported us in the difficult times 2 years back, and happy to, and today we are getting a very, very substantial market share in some of the categories. Thank you so much.
Finally, a rapid fire question, because there's only a minute available, 15 seconds for each and every one. One question, all four are going to answer. Now, think you are an MFD and I come to you to invest 1 crore rupees. I'm a risk averse investor. I can take risk. I would like to invest my money with your asset management company for next 5 years. This will be very helpful for the many IFAs here. 5 years I am ready to invest, 1 crore rupees I am coming with. Yes, as a single investment. What will be your strategy? And what will you suggest me as an MFD to invest for next 5 years? What is the fund from your AMC you will suggest me to invest, hold on for next? It's a 15-second question for everybody. Yes, sir.
So, I will select a fund which give me highest flexibility as a money manager. I talked about if I can optimize the long term, short term and medium term, and we can optimize also on the market cap, then I will, one scheme I will select will be Corn Flexi Cap. It will give me highest level of flexibility and with enough clarity for 5 years.
Yes, sir. Yes, sir.
So, since you have said risk averse client, I would say, a balance advantage fund, because we have a flexibility to move from 30% to 100%. And
Which fund, sorry?
Balance advantage fund, BAF. I think that's the, everybody knows balance advantage fund as a category, because the flexibility lies with us in terms of we have a very apt model to identify what is the personal asset class we need to keep. So my choice would be balance advantage fund.
Ananayaji.
See, if I look at a track record, it has to be focused equity, which has done very well. But still, I would suggest that it carries one challenge, which is you can't go beyond 30. Just to mitigate that challenge is the reason we launched our Flexi Cap fund, which is nothing but a focus plus. I would say if someone is looking for a 5-year kind of a view and is a risk averse person, our 361 Flexi Cap fund is an answer to it.
Yes, sir. George.
So I would suggest quantum long-term equity value fund. The two key reasons are, one, the interest rates in the next 5 years would be much different than what we saw in the last 10 years. And the earnings trajectory is quite supportive. So these two combination is a good combination in terms of that fund to perform better.
Thank you very much. But before I end, one thing which has come from the audience, which is, see, normally many of the MFDs feel that normally when there is going to be any change in the market, or they feel that we are not supported. The feel from the audience end. Why? Because the relationship between the relationship manager and the MFD, how we can handle that, you need to take forward in the days to come. And this is from the part of the audience which has come. You need to patch up that and do something. And there are many other issues many people face here is KYC. It's a nightmare for many people here. Anyone without KYC problem? No KYC problem at all for me. I am comfortable. Anyone here? See, the entire hall is having, every one client, something or other. These are all the issues which many MFDs are facing right now. We all need to jointly together. You can take it. It will be very good for the MFDs. Thank you very much for guiding us today evening at Kovala.